So we have a new feature and a new tool, a new product that we're rolling out today. We have it at a place where I'm feeling very confident on it. I'm very proud of it, but I do want to take some time today to explain the background behind it and just explain who we are, what we're trying to do, and where we are today and where we're going. The short story is that we are launching our Quick Look report, which is an engineering report that is not an appraisal, but it's all the highlights that you would need. It's not for IRS or tax purposes. The method that we're rolling that out with is a new website. It's a way that you can go and find your property in the same way that you would look at Zillow to find what your estimated property value is and what's going on in your area. You could do the same thing for your minerals. Just oil and gas minerals at this time. In terms of location, it's pretty much anywhere in the country that has from Texas up to North Dakota and then from about Utah over to Pennsylvania. So we're covering most of the country at this point. From 2020 until now, everything I've been doing has been building a database, a model, a systematic way to use any engineering I do to better the result and the output for the next person. It's continuously improving and getting better and getting better and getting better. Fast forward to 2022, and the idea had matured some, and that's when I started talking to my brother. My brother is a programmer, a software computer science guy. I am still figuring out what to call his people in his world. He's figuring out what to call people in my world. We've been in two different worlds this entire time. He's been in like the tech world, and I've been in the oil and gas industry. And by some coincidence, we ended up living back in the same town again. We actually live very close to where we grew up, and he lives down the street from me. He has his kids, I have my kid, and they play almost every day. Almost daily, we've been talking over the last several years on, we get along so well. We have confidence in each other's abilities. Man, I wish we could just make something work in starting a business. So that's when we started talking. And in January of 2023, this year, it's December of 2023 right now, Jason joined PECAN Tree Oil and Gas full time. And so this year, so we're now, year 3 into this process. This year was when we spent the entire year so far getting him up to speed on oil and gas, getting my database from my computer into a reliable cloud model. Everything had been done in one single database, but there was some cleanup that needed to be done, synchronization, all the things that make a product from something that a single person can use to something that multiple people can use. It's been a whole thing because there's just the two of us, right? And at the same time, I'm still doing all my appraisals, I'm still doing all my client work, and I'm still momming. And while this is my full-time job, I'm not one of those people who wants to work 80 hours a week in order at the sacrifice of my family, like family first for me and for Jason. And so just trying to balance all of those things. It's been a slow process, but we got this quick look to a point I am very happy with it. Let me show you this quick look. So there's a lot of different ways to get this information to you as the user, but I wanted to do it in the most responsible way possible. I didn't want to be giving information to people who would use it inappropriately or incorrectly or misinterpret it or think it was meant for something else. And then even if I completely signed off on responsibility, I didn't want that to tarnish the name of an appraiser. I didn't want that to tarnish my reputation. I didn't want them to use it incorrectly, for them to make bad decisions. I wanted it to be something that I knew that they were using correctly. When I say quick look, I don't mean it's a short report. I mean, we can generate it really quick. At this point, it takes about 30 seconds to a minute for it to run. And so all of this is based on all the stuff that's in our database already, and it's just customized to certain user inputs. There's a lot of customization that's going on in the background. There's a lot of modeling and calculations happening in the background, but it's very fast. So that's the quick part of it. Now, the report itself, this is a 25-page report. The reports kind of vary in size a little bit based on how much activity is going on in the area, but most of them are about 25 pages. But let me take you through what's in a typical report. So this is what we're calling our engineering valuation model, which is the umbrella. That's the background heavy lifting part. This is one of many reports we plan on releasing in the future. As I've said before, it's just the two of us, so there are limited features that are rolled out today, but we do have a roadmap and a plan of what's coming out next. So one example is right now, this is for mineral interest. The next report that we plan on working on is for working interest owners. From the working interest side of it, looking at, okay, what if you do have expenses that you need to account for if you are part of the drilling and completing of the well? how do those costs play into this? Because right now this is just for the mineral owner. And you'll see that it's very geared towards an entry-level mineral owner. And it also assumes that you're a mineral owner who wants to or is leased. Eventually, we will have lots of different options that you can enter this report into and have different customized report purposes. This report has a lot of things in it because it's to service a lot of people, but eventually we will have different report options. So we started with it's as of a certain date. The as of date is currently as of whenever the model is last run. And I can't go back in time for this model. If you need to go back in time, say as of January or as of years prior, that's a custom report at this point, and that should go through our custom process. It's more of a retrospective appraisal at that point, or a retrospective quick look, custom quick looks. The quick look model, the models that are live right now are just as of the most recent date. You enter it saying, okay, what is the date that we're looking at? And that's the latest one we've ran. What property is it? How many acres? And what royalty rate are we going to assume as we were entering this? And then also, I think I mentioned it before, but this is not an appraisal. Appraisals are much more thorough. They're usually like 40, 50 pages of things. And appraisals typically have more boxes checked. Like, let's look at it from every angle instead of just the main angle. Maybe decline curve analysis and cash flow income method is the primary method, but we can fine tune it using offset sales and lease bonus estimates and things that there's ways to fine tune that value or double check that value. Maybe there's some rocks we need to look under. So the appraisal has its own purpose. This is not an appraisal, but I usually call it the 80-20 rule, where 80% of the answer takes 20% of the time. And so this is roughly 20% of the cost of a full appraisal. So we have forward, just helping you know what this is for. Like I said, I wanted to be very clear. Let's look a little bit into what goes into this. So when I say that this quick look takes in everything that I know and puts it into one report, it really is doing that. We're taking geology and engineering. We're taking the decline curves, the type wells, the type curve areas. If you know what a type curve area is, there's about 400 different type curve areas that are feeding into this model that have been just me painstakingly looking through almost the entire nation at this point to identify analogous reservoirs and cluster them together and use methodologies. In case you're curious what my main methodologies are, so I hinge pretty heavily on the Society of Petroleum Evaluation Engineers recommendations for engineering evaluations and when it comes to petroleum engineering. And one of the parameter surveys that they put out is, if it'll focus, so this is the survey of parameters used in property evaluations. And this is the 2019, but I have digital versions of all the latest ones, and that's why I only have the hard copy of 19. So it's a relatively niche industry that I'm in. I recognize that. And this society recognizes that also. This is one of those societies where you have to have certain credentials, and then people write letters of recommendation for you to become part of this society. So it's not just one where you can just pay a $20 membership fee and become part of it. So when they are surveying people in the industry and then coming up with this report, this is relatively robust in terms of what it can be used for. This is where I'm getting things like how to adjust for risk. So if you have these certain risk categories that I have other methods of coming up with, how do you take something that is probable and assign a value to it? And that's where there's a bunch of charts and things that show you like, okay, well, if you have something that's developed and producing, you should value it this way. If you have something that's not developed and probable, value it this way. Here's the range for the industry. Here's the range for if it's a working interest or mineral interest. Every year they come out with a new one. And just to give you an idea of some of the costs that go, this little small, thin report is about $200. Everything in this industry is super expensive, and I am fully aware of that, and I'm trying to keep you from having to absorb any costs that you don't need to. But just when you're looking at the cost of these things, that is definitely going into what we have to cover. So some of the methods, so a lot of people don't know that you can actually calculate what things are worth. I get the feedback all the time saying like, oh, well, but to use comps, because that's how houses are valued, right? No one would say, well, this house is worth this much because if you add up all of the bricks and mortar that go into it, you get this cost, and we're going to use no, I guess you can, but it's not the primary method. You look at what the houses around you are selling for, you have your dollar per square foot, you adjust it based on your view and how new things are and how good things look relative to your peers. That's not how this industry works, because we can calculate it. There's a lot of geology and engineering methods into coming up with how much oil and gas is left, how much is there, how much you can recover, and then what is that worth? How fast will you recover it? What pricing will be happening during that time? And so you have the geology and engineering on the how much and when. You have the appraisal methods going into, okay, well, how do you value that how much and when, in the cash flow method? But there's other ways you could, like we just mentioned with housing, well, what are the people around you selling for? That does kind of influence the price, but because sales aren't public in this industry, like you can't just look up to see what your neighbor sold their minerals for. Comps aren't really worth a whole lot because it's all just word of mouth and everything's so individualized. You have a whole bunch of custom homes basically that no one tells you how much they sold it for, and you have to guess how much they sold it for. It's not super useful. There's all the different methods there. We have all the market inputs. Like I said, we have the parameter survey. We have what commodity futures are. We have buyer-seller feedback. Whenever I talk to a new client, whenever I talk to a new buyer, they give me insight as to what's going on. Even just world events, what's happening in Ukraine, what's happening in the Middle East, different places around the country impacts what your minerals are worth. All of those market inputs are going into this. We have proprietary data. Like I mentioned, every time I do the analysis, it gets better because your data is aggregated and made anonymous, and it helps the next person. Then we also have our in-house data and models, which is geology and engineering. Here is an example of the areas that I've been looking in terms of doing client work and building the model. Everywhere with a star is somewhere that I've done a deep dive into, plus some other areas. But if there's not a star there yet, then I probably haven't dug as deep as I would like to. But with each new project, it continuously builds. And so that's just something that evolves over time. Eventually, we'd like to hire more people to have more in-depth looks at all of the areas. But for now, you can see there's a high focus on the Permian Basin, the Anadarko Basin, Eagle Ford, Haynesville. Surprising amount of stuff in Utah, a good amount in the DJ Basin, a lot in North Dakota, in the Bakken. We've recently, this Pennsylvania, Utica, Appalachian, Marcellus trend, that is a recent thing for me, and that is due to demand. Thank you. So we are now officially in the Marcellus and doing evaluations in Northeast, all across Pennsylvania and West Virginia and Ohio. After I've looked through and done all the research, I have my own model of what's going on. Then we also have the public data. There's a lot of data that goes into this. There's public data, which we're getting the majority of our information is coming from Well Database, which is a data provider similar to Enverus, Drilling Info, or IHS, whatever that's called now. Just one of those where it's taking public data and taking data from all these different data sources and aggregating it and providing it as a service. So we do take advantage of that from Well Database, but then we also supplement that with other information such as tax appraisal data, investor presentations, or any places where there might be gaps in the data or just things that need to be manually overridden. We have ways to manually override that in our database, and so that's where the proprietary data takes over. And so all of that comes together into what we're calling the engineering valuation model. If you have a better name for that, I will take it because I am not a marketing person. I'm an engineer. Jason's not a marketing person. He's a programmer, and we're just doing the best we can at this point. But if you have a better name than engineering valuation model or quick look, feel free to comment it below. But all of that comes together, and within 30 seconds now, we can spit out the quick look. I think there's one other important thing to help get a feel for what we're actually doing. Something that was necessary was there's a lot of calculations that are happening in the background. Geology and engineering is a very regional thing, and it needs to be done on a small basis. I wanted to follow engineering principles, the same thing that I would do for an actual appraisal. I wanted to do that for these quick looks, but I needed it to be more programmatic. When I'm going through and doing Society of Petroleum Engineer recommended practices for type curve analysis and type well analysis, guidelines for the practical evaluation of undeveloped reserves and resource plays, which is unconventional reservoirs, estimating ultimate recovery of developed wells in low permeability reservoirs, which is the shale stuff. When I'm going through these methodologies and coming up with the reserves volumes, I want to continue to do that high level or that high quality work. But that can be done once. And so what this model hinges on is that there is a grid model in the background that does all the heavy lifting. That's what the actual valuation model is based on. So there's a grid in the background, and I made it hexagonal so that it wasn't confusing with the land grid, which is the squares here. So that's the section township range thing, is the black lines. And then if I turn that off, you see these little honeycombs, and the honeycombs are doing the heavy lifting calculations, and that's done once, or it's done every time I run the model. It'll do all the heavy lifting calculations. Then on top of that, we have our quick look, which will then take these parcels of land that you draw on top of it and customize it based on which properties are in which hexagons. So when you're running this quick look, you have a very customized report that can be spit out very quickly and yet still give all the heavy lifting engineering report analysis behind it that is customized to your particular location. I won't go too much into that more than that because it's already probably too much. But the resulting report is what we have here. So we have a summary dashboard, and this first dashboard page is all the things that I think that you should know as an owner. If you just want to take one page, walk with you, and throw everything else away, these are the things that I want you to know. So the details on the property, that it's a mineral interest, that you have 13.3 net acres. I have a video on net versus gross acres, but the short story is that gross acres is if you were to put a fence around the property, while net acres is your percentage interest times that amount of acres. So if you have a 13.3% interest in 100 acres, you'd have 13.3 net acres. Lease royalty rate, even if it's not leased, we wanted to go into this with an assumption. That assumption is your lease royalty rate that we're going into all these equations for, because it is directly proportional to the value on what you're leased at, because that is the amount of the money that you receive when these produce. We end up with a estimated fair market value. This is what I would target if everything were fair in this world. If you could get the proper exposure and you could properly negotiate back and forth and you had equal information on both sides of the table, this is what you should be able to negotiate it to, because this is what the underlying oil and gas value should be. There's a range on that because this is not a super precise version of the appraisal. This is the 80% version of the appraisal. So there's a range on it. Plus, every area has little things that can influence it that are outside of the scope of this report. So if there is a bad development pattern that specifically impacts that particular section and not sections around it, if you're leased by a poor operator or if you're leased by a really good operator, those things can influence it some beyond the scope of this report at this point, but this gets you the ballpark. Beyond that, we have the well value. So the value of just the wells that are producing today. That well value is what your tax appraisal is probably based on, and the well value is the thing that you're probably most familiar with. There are other tools out there that will take your production revenue, multiply it times a certain number, and call that your well value. A lot of times it's improperly named your mineral value, and that's not actually your mineral value. That is the value of the producing wells. There's more value beyond that, and your minerals encompass all of the value, not just the producing wells. You actually can have a substantial amount of value in the non-producing minerals. So the things that haven't yet been drilled or are yet to be or about to be drilled, the things that aren't yet producing. Just because it's not providing revenue today doesn't mean it's not going to provide revenue tomorrow. But How soon and how much are the questions. That's what I answer. Now, this value beyond PDP, the industry would call it the reserves value, the market value that a buyer is looking to capitalize on and make a return on investment on. So if you are looking at I just want to know what the producing wells are worth, you would just look at this top number. But if you're looking to sell the entire mineral interest, I would look at both, combine them together. And this is the main differentiator between our product and anything else that I've seen personally, is that there's a lot of things that can tell you what your producing wells are worth because it's a relatively simple calculation. Most people can just take your amount of revenue and multiply it times some standard number between 36 and 60 and call that your value. Now, I have another video on that because that is not exactly precise either. And this goes into the more advanced way of doing it, which I also go in that video. It's much simpler than coming up with the other stuff. We have all of it together. You have your PUD, PROB, POS. The whole risk portfolio is all included in here. The lease bonus, we have a lease bonus estimate too. So if you're unleased or if you're trying to figure out if it's worth breaking a lease or getting something released, all those things, we have a lease bonus estimate. This is based on just the undeveloped value. And it's saying based on the undeveloped value and the rules of thumb and how the market is paying lease bonuses, we have a whole page that goes into the details. So based on certain properties of the remaining value and how much the industry is paying for leasing that remaining value, this is our estimate of how much you should receive in a lease bonus. And then also the terms associated with that. If the property is already leased, this is probably not something that you should be looking at necessarily because once you're leased, once it's producing, you're probably stuck, honestly. But if it's not, and this is something you're interested in, here we have. These pink boxes here are what I would like if I could put flashers and like highlight the things that are most important that are driving this value, the sales estimate value. You have your producing well value, and then you have your permitted, drilled, and completed wells that are recent. Those are, if I were to just highlight anything, those three things, if you know those three things, which wells are producing, which wells are permitted, which wells are drilled, which wells are completed, but not yet producing or recently producing, if I could have all of my clients know those things before they sell, that would solve so many problems. So I wanted to really highlight these things up front. This particular property, I managed to choose one that didn't have anything, but imagine this had one well here, two wells here, and it would list which wells those were. Oh, here we go. So here's another example property. This is actually the property that we were talking about in that first example. So 3 wells drilled in the last 18 months, 4 wells completed in the last year, and those may or may not be online. These happen to be online. We will estimate your monthly revenue. So based on your interest in that section and which wells you should have interest in because of your interest, exact location of that interest, we will estimate your monthly revenue. That's also a relatively simple calculation for us to do. There's other companies that can do this also, but since we're doing the heavy lifting, might as well provide you with these things also. But so we have a monthly revenue estimate. That does have a range because this is not exact. We don't have the exact value that each well is receiving. These are all estimates at this point. But then we also have what are the active well names and well leases, what are the inactive ones, so things that I might have produced in the past. If you're like, oh, Uncle Tom talked about the Smith well. Oh yeah, this is the Smith wells here, but it's not producing anymore or something. I'll tell you which producing reservoirs are happening in this area, which operators are operating in this section, and then what reservoirs have value that you should be considering when you're looking at this area. So for this particular property, there's Madison, the Bakken, and Three Forks are the main reservoirs that have undeveloped value. For this other property here, this is Permian, so there's a bunch of reservoirs. So then we just help you walk through, like, where is this property located? You might not know the details of what's going on. We provide a satellite image, calculated acreage of each, like how we're going about calculating these acreages, what wells are happening in this area. So this pink box is the property itself, and then the blue are the units that you're included in. because of the location of that pink box, and then the wells are overlaid on top of that. So you can see, how you're getting interest in different wells, which wells are where, what they're named. Then we have this high level map. And this is something that is actually on for free. You can get this information for free, but we wanted to include it here just so you could have it all in one place. If you don't want to spend a dime, but you just want to know if something's worth investing a little more time and money into, you can say, well, I have 1 acre down south of San Antonio. Okay, it's in Karnes County. Oh, this is showing that 1 acre is worth a lot. This is a high value, over $10,000 per acre here. All right, well, I should probably pay more attention to what I'm doing when I'm dealing with this 1 acre. Or if you have 100 acres, right? Then things multiply pretty quickly. But if you're saying, well, I have half an acre in Travis County, and Travis County is here, there's nothing happening in Travis County. I'll give you the short answer there. You can go there and say, okay, well, it's under $50 an acre in Travis County. I have half an acre. Woohoo! I have probably less than $25 of value for my minerals in Travis County. So you can judge just based off of free information what level of work you might want to put into this based on what you're considering doing or what you need to do. And I'll go into this a little more in the future. So then we have several different pages explaining what goes into our sales estimate. What range would you expect that are unique to this property? What range would you expect if you were to hold on to it? If you were to be talking to the appraisal district, if you were to be getting an unsolicited offer or a solicited offer, or maybe you're Exxon talking to Chevron, like you have just different parameters, different things that you're interested in. You're more interested in the producing wells, or you're more interested in the undeveloped acreage, or you're only interested in the producing wells. Like there's different scenarios will affect each property differently. And so we wanted to present that in a way that you could actually use that information to guide what you're going to be doing with it. We have the full leasing information, which gives you the royalty, like if you were to lease at different royalty rates, how that affects the lease bonus. We go into more details on the permitting, more details on the drilling, more details on new wells, because sometimes what happens is a new well will be drilled. It's online, it's starting to produce, and someone will get an offer that's really high that they hadn't seen before, and they're like, well, I should take this. This is the highest I've seen. They take it, not even realizing that there's something producing recently. And one of my recent videos, I went into a situation like that. I wanted to highlight that particularly. Then we go into more details about the wells themselves, like which wells are producing, just so you can see some of the dates, what's happening, what reservoirs, what drill type, who's operating that well, what the latest oil and gas rates are that have been reported. What are the non-producing wells, like what's happening that might not be producing anymore, but you should know about. And then details into the monthly value and the monthly revenue, which was on the dashboard there first. And we'll go through and show you, like, here's the estimated decimal interest that we think you should have based on all of the calculations and assumptions that we know about, any units that are drawn and formed, any pooling that is happening, if there's pooling and then unitization, like allocations happening, all of that is being considered. And here's the unit factor, which is your how much of your property is in the well's total unit. And based on your unit factor and your net acreage and your lease royalty rate, how much interest in the revenue we expect you to have. And then what is the value of that expected revenue? There's multiple ways, like I have mentioned before, that there's multiple different ways that you can go about estimating the value of producing wells. Because everything's building, if I have declined the well and done a robust analysis on that particular well, that analysis goes into this report. Decline curve analysis is what DCA means. That's the gold standard of valuing a producing well. If you are not using decline curve analysis, then usually it's a production multiple, is you're taking last month's production, last month's revenue, multiplying it times some set number. But the industry usually has a single set number that they use for all wells when they're trying to like roughly value it, like back of the napkin calculations. I've gotten more fine-tuned with that and said, okay, well, based on the age of the well and the type of the well, we can do better. Let's do better. And so I put out a video showing how I'm doing that, but this will show you which multiple I'm actually using. And I've had people say, oh, I would never use 65 for a multiple. I'm like, well, you should. You really should be paying. higher. And the reason that people don't use these higher multiples is because they're having to use it for everything. So no, it's not always a high number like this. If it's a very new well and a new high decline well, this could be as low as 24. But if you were to try to approach a seller and say, I want to pay you 24 months production, you'd be probably laughed at, because there's probably other things. You would have other people providing offers, because those multiples usually assumes that's the only value that someone's putting on it. This is just the value of that producing well. There's other things we're including. So the multiples need to be considered in the whole. What's your current value in that particular well? How does that add up as a whole to which operator? So let's say that you're getting paid by Ovintiv, but you're not being paid by VF Petroleum. You're like, oh no, I'm not getting paid by VF Petroleum. And then you look, you're like, oh, present value, $0. Okay, so this is not actually something I should worry about. This has a zero value to me. It's just like this tiny little interest that the model thinks that we should be getting paid for. Or maybe it is valid and it's showing that you should be getting $10 a month. You can decide for yourself if it's worth $10 a month to go track down that operator to get the interest that you should be getting, the payments you should be getting. You can use this to prioritize your task list, basically. So then we have the value beyond the producing wells, and this is where we get into the more robust methods being used, the reservoir engineering, the things that actually make me worth my time and money. Is the value beyond the producing wells, because like I said, producing wells are relatively easy to calculate, but this is more difficult. This is where you're looking at the 400 different type curves, what's going on from a geology and reservoir standpoint, how are the wells actually being completed, how far away from those completed wells are you, what risk profile is being included. You have all the different reservoirs that are being considered in this area, and then I even break it down. If you are very sophisticated and you want to get even more sophisticated with this report than what I'm providing, you can take this information and adjust this total value however you see fit. Or let's say you're in a different area where maybe there's no reservoirs of interest that have been modeled, there's nothing being drilled, but there's some things brewing, some things happening. Then there'll be an additional line here saying there's proximity effect happening on this property. There's some intrinsic value to this property, and you shouldn't just take the production plus the reserves. You should consider other things. The proximity effect is what we call it, and in terms of it raising the value. And that's kind of the catch-all. So if something is happening that's not yet caught by the public eye or not yet caught by our models, that is the way that our model catches those things that are happening. So if a well comes online and starts producing, it will raise the value of that particular section, and then it will start raising the value of all the areas around it, even if we don't know why yet. That's how we're accounting for that. All the rest of the pages are going into, what are just more detail for you on what we're actually doing, more definitions, more references and data sources. It gives you a whole glossary in terms and abbreviations. I wanted to give y'all as much information as possible so that you had as much information at your fingertips that I could just hand out. This whole report only takes 30 seconds to a minute to output. So I can package all this stuff and hand it to you, and you can digest it as it makes sense to you. So then the second part of this problem that we went into this trying to figure out. So the first part was trying to figure out what a quick look would actually look like. And then the second step was, how do we get it to people? How do we deliver it? And so that's where the website comes in, is how we're actually delivering this product to you. So you can self-service and make this cheaper overall if you're willing to put in the legwork, or if you're someone that goes through several of these a day, if you have clients that have questions and you can look it up for them. If you're a landman and you're wanting to do research, those are the people who have understood this product the best, are the actual landmen who do this day in, day out. They get questions on what something's worth, and now you have a tool at your disposal. You could answer those questions. Like I said, this is all in development still. We're not marketing and advertising experts. That's coming secondary because we wanted to get functionality and accuracy first. This is what's available right now. You can go in and say that you want to map something in North Dakota. Like you have minerals in North Dakota. Select your state and hit search. You can actually look at throughout the entire country without having to do anything special. It makes it load faster if we just do one state. So then you can either zoom in, zoom out, scroll around, look around as it makes sense to you. Or if you know what county you're going for, say that you are looking for something in Dunn County, it'll zoom in if you select it here. Then once it zooms in, let it load for a second and you get a more detailed land grid at that point. And if you know what you're looking for, it gives you examples of what the land grids are called over here. So if you know that you're in 141 North and 91 West and you're section 18, you can type that in using the example format here and then just click on that and it will zoom to that section. Of course, I went to one that wasn't super exciting. Let's go further west and a little further north maybe. There we go. That's more exciting. So like I mentioned before, this is the hexagonal grid that's put on top of the entire country. And then we had the value per acre down here. If that's getting too much and it's confusing, you can toggle that off by hitting toggle layer and then it's gone. You don't have to look at it. It won't get in the way. So let's say that you're like, okay, well, I have my property description on my deed says that I own the north half of section 18. So then you could click draw. The default should be already clicked on draw. You should see these little crosshairs and then you just click and outline the north half of the section. You don't have to be that precise. The more precise you are, the better, but it doesn't need to be that precise. So once you're done, you'll see it kind of keeps moving around with you, but just double click and you'll see that this little area, you can move the whole thing or you can click and move that one data point. It's a little finicky. We're still working on, these are the default map box tools. And so we want to make this better in the future, but it is what it is for right now. If you want to, you can even zoom in as far as you want and adjust these little data points here. You can go in and adjust each one and make it right on the line if you want. Again, you don't need to get that fancy with it, but I know some people are more paranoid about that than others. So if it bothers you, ignore it. If it doesn't bother you, do what you want to do. So then you have north half of the section highlighted and it shows you that you've selected 312 acres. If you have the north half, it's probably 320. This just shows you what's selected. Maybe this is supposed to be a little bit further down. So then you can say select this area and you have two options. You can either log in to save this property to your account. And if I save this property to my account, I can always come back and reference it later. I can name it. I can put in for more information. Or I can just outright purchase that quick look report that we just gone over. I can go ahead and hit purchase. These are the same sample pages that we went over. Again, we're working on the marketing and all those things, but put in your email address, name the property or name the person who owns the property, whatever would be a good reference for you. Right now, we just have mineral interest, but like I said, royalty, overriding royalty, working interest, and operated interest are all coming soon. You put in your leased royalty rate if you're leased. If you don't know what your leased royalty rate, you can just leave it at 12.5. That's the default. Also, if you know your net acreage, you can put in your net acreage or leave it at 1. And a 12.5% royalty rate plus a 1 net acre ends up spitting out a report that's in dollar per net royalty acre. So if you're getting an offer saying I'll pay you $3,000 per net royalty acre, your report would be in those same units. Otherwise, it'll do the calculations for you. But if you know what you have, I would put in what you have. But if you don't know, you can just leave it as it is. It'll reiterate that you have this many gross acres outlined. You can put in any additional notes, either notes for yourself or notes for me. At this point, I review all reports before they're sent out. Eventually, it will be a more automated on demand, like within an hour or two, you'll get the report. But for right now, just for a quality control purpose, I'm still reviewing everything. So it's about a day or two turnaround. But if you want to leave me any notes, you can. If you want to leave yourself any notes, you can. And then based on how much activity is happening in that area, it's automatically priced. So high activity areas are $500, medium activity is $300, and low activity is 100 at this point. These prices might change in the future, but just as of right now, that's what it is. And then you just hit submit, and that will order a report. But let's say that you wanted to save it instead. If you don't already have an account, you can hit login to save, and we're currently adding more options here. If you notice, there's not an option to use any email you want to. It's actually more secure to go through someone else's login, because that way they're handling the security. So they're tracking your password and all the things that are very secure. And if you can imagine, Google, Facebook, all these different platforms have a lot more security professionals than my company does. So it's actually in your best interest to use a different provider than storing your login information on our site. But that is going to be an option soon. But for right now, a lot of people have Google. Facebook's coming next. Because my brother's a programmer, there's GitHub. If you're one of the 3 people watching this that have GitHub, feel free to use GitHub to sign in with. So I'm going to use Google. I'll probably blur this part out so you don't see it. If you don't have an account yet, you can create one the same way, and you can save it to your properties again, or you could just buy it, and you could say this is the old ranch land, and I'm going to put in no. I wish, right? 33% royalty. And we're going to say I had 10 net acres. And look into this. Tracy. All right, we'll go ahead and save. Now what happens is you now have a list of all your properties, and we can go into the details of that property. So here's where, if you wanted to manage those properties, you can go into more details. So you have any actions. Like I said, this is all being developed currently. So currently the only action is to purchase a report. You can edit the well interests, or you can delete this property. You have your lat and long, and then the identifiers up top, geographic information like which section it's in. So the key performance indicators are those pink boxes from the quick look report. And if you are a subscriber for the Essentials plan, which is $39 a month, it will automatically generate these key performance indicators for you. If you're not a subscriber and you just created a free account, you won't be able to see this. You'll see a note saying that that's not quite available yet. Then you have these property details. And so these are the basic details that we took in at the beginning. But let's say that you're a landman and you're wanting to track more information. Or let's say that you want to just use this as your single place to put in information. And eventually, as we get more sophisticated reports, or if you ever need to request a formal appraisal, or if you just want me to look at something for you and pay for an hour of consulting, you can actually come in here and edit this and put in more information. And we have it defaulted to where it's the simple fields, but there's a lot of things that can influence the value and the technicalities and what exactly do you have interest in. And those things that I was talking about affect the appraisal, but not as much the quick look because it's the 80% answer. So then if you hit display all, these are all the things you could input. So you can say if it's associated with a certain tax ID, if it has a certain legal description, right? Where is that legal description described? And so it has example inputs, and then there's also these little information boxes to help you see a little more information about what we're talking about. If you know these things, you can put them in here and save them. If you request an appraisal, if you request consulting from PECAN Tree Oil and Gas, this is stuff that we'll then have access to if you were to request something, because these are the questions that I'm going to be asking you anyway. So if you're professional and you're tracking information for your clients, if you fill this in, that will just make it easier for me later. But then also as we get more sophisticated, more robust reports, we can include things like the depths and the primary term length, and if there's an override along with a royalty interest, for example. These are all the more advanced terms. If you know this, go ahead and fill them in. You can hit save. Once you save it, it'll include anything that's filled in here. This is the map that we talked about that you've seen before, has the wells just in that local area. If you need to edit this, you can edit the property. Just note that if you, like, say you went up and you noticed that, okay, I didn't mean to actually include the 6 acres in section 17. Oh, look, this is done calculating now. So now we have the key performance indicators for this section. So there are no new permitted wells, nothing drilled, nothing completed. You can go in and hit edit, and this brings up that same thing that we saw before. You click on the box to make it editable, and that's when you can zoom in and start editing, moving things around. Okay. So look, that's probably, this overlap here is probably how we had the 6 acres in that other section. So then you can like just click on it and move it over and hit save, and everything will recalculate to the new section. So this well decimals piece here is the same as this. So when we were calculating on the quick look, your revenue interest in the wells, one thing we quickly realized is that people know exactly what they're being paid on these wells, and they want to enter the report with what they know. So we wanted a way that you could override these estimates with what you actually know, because a lot of times that is the one thing you know, right? I know I'm being paid 0.000534425 on this well. So we wanted a way for you to use that information to influence the report, to put out the exact amount that you should be valued on these wells. So that's where you can come in here and do that. So we're going to list out all the wells that you should have interest in and your decimal interest based on all the things you've told us so far. If you hit display all, it will show you all the wells in this section. If you don't hit that, it will just show you the ones that are listed as active. So if you have wells that are recently completed but not yet active, or being drilled or plugged or shut in, whatever the case, you might need to hit display all to show all of them. But if you say, well, I'm not being paid 0.001795, I'm being paid 0.001796, a lot of times people don't know what's significant and what's not. So I wanted to provide you a way that you could decide what was significant to you and what's not. If you want to ignore this and say, yeah, that's plenty close enough for me, like 0.00001 is close enough for me, you can leave it as it is. But if you want to, maybe we're very far off and you're like, that's not right. If we're very far off, I would go back and look to make sure that all the inputs are correct, because there might be something else going on. But if it's close and you just want to fine tune it, then you can hit edit. It'll take you to the well interest page, and you can overwrite that pay decimal with, like I said, if it's something very close to that but not quite, you say, well, no, it's 9635, yada yada, right? Hit save, and when you run that quick look report, it will use this overrided decimal instead of the pay decimal. So then it just gives you this little notification. You can just clear that notification. So then now it is there. If you have a bunch of wells, you can filter to just the ones that are overwritten. Just show the ones that you've fine-tuned. If we're picking up a well of the 0.00000001 interest and you're like, I don't even want that to show up at all in my report, you can come in here and say it's a 0 and just zero it out and save that, and that will zero out the well. So that's ways that you can fine-tune your report, fine-tune your outputs, and then go into this with a customized quick look, even more so than before. Right now, I am an essential monthly subscriber because it's my product, right? But if I'm logged in with this other, let's say you go to your profile, you go to your subscriptions, and you can see that currently I'm on the free account. That lets you only save 5 properties, and then there's also other limitations like we talked about. You can hit upgrade, and that will take you to our latest pricing and what features we have available. Right now, this Essentials plan is only $39 a month. So that gives you that automated well list with the estimated well interests. Again, a lot of those aren't our key features that we're really going towards, but it's things that we're already calculating that we wanted to provide as tools for you to use as needed. But it lets you store and save and regenerate those quick look reports. We're going to have more options for continuous monitoring. If you're going through a sales process and you just want to be continuously updated if the value changes in that area, that will be an option very shortly. If you're just wanting to support this project, coming in and subscribing it as an Essentials subscriber really helps us out. This is all just bootstrap. Like I said, it's been 4 years in the making. If you just want to support the project, we would love that if you come in and just subscribe just to keep up with what's going on. Come in, put your properties in, and reap the benefits of the features that we're going to be rolling out. And you can also get a discount if you subscribe for the whole year. That is the long-winded version of what we have so far. I hope you can see why I'm so excited about this. We've put in so much work into this. For anyone that is waiting on an appraisal or wanting an appraisal to be done, I do apologize that everything has been taking so long. The sheer amount of demand for this type of product in the industry is just apparent by the number of people who contact us daily for questions that this type of solution will solve. So I hope that you are one of those people who this solves it for. Please let me know if you have any questions. Again, almost every day there's a new feature or a new tweak or something that we're rolling out. I mean, there's a high likelihood that by the time you watch this video, the website will look completely different. We might have renamed things. It's very much in flux, but the product itself is very solid. And I just wanted you to know how much work has gone into the product itself. Anyway, thank you for following along this journey. My name is Tracy Lenz. I'm a petroleum engineer. I have a master's and an undergraduate in petroleum engineering. I'm on year 15, 16, whatever it is now in the industry doing this thing. I've kind of lost count because 2020 till now is just a blur. And I've been comparing the outputs of this quick look to my formal appraisals for the last couple years now. And I've even impressed myself with how accurate they are. And like, well, shoot, I could have saved myself a whole week of work if I just had this report before. I hope you can see how excited I am about this. Enjoy. Thanks.